You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That rockin' tune means it's time, once again, for Volatility Views, the premier program for volatility traders. And my name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, coming to you one final time here for 2016. Hard to believe this year has come to a close already. What a crazy, tumultuous, just head-scratching sometimes year it has been. But it's hard to believe it's in the rearview mirror or about to be already. So crazy. We have a lot to talk about here on the show before we get to that. And of course, if you're missing us over the holidays here, you say, man, I want to go back and see what the heck they talked about on Brexit or in the election or whatever, maybe in that crazy period in January and February where everything was just off the hook. Well, then you can do that. You can find all of our great archives, a lot of great episodes, interviews, discussions we had during all of those periods. Easiest place to find all that, of course, theoptionsinsider.com, or of course iTunes or Google Play or iHeartRadio or wherever your loyalties lie in the great podcast wars. We don't judge. We're there on all of them. Pocket Casts. I don't care how you get us. As long as you have access to it, we welcome you. And of course, you can always join us, as always, every Friday, noon Central, 1 p.m. Eastern, via Mixlr. MIXLR. Just follow us on social media. We tweet out the link all the time, or just grab it once and follow us in Mixlr. You never have to worry about it again. You'll be notified instantly the second that we go live. And however you listen, whether it's via our mobile app, the site, however you do it, hit us up with your questions, your comments. We love to hear from you guys. And joining me on the old Vol Views to wrap up and look back on, and just in general, just round out here the 2016 of volatility, are my usual compatriots, my partners in crime. Let's start off. Let's go with the man. I believe he's back in the proverbial corner office today. He was called back. He's like Al Pacino. He keeps trying to get back out, and they pull him back in. Mr. Russell Rhodes, soon to be Dr. VIX once he gets all his papers in order. The head of education over there at the CBOE Options Institute. Mr. Rhodes, welcome back to this final Volatility Views of 2016.
Well, thank you for having me back. I am in the office, just visiting the VIX pit a few minutes ago. There's actually still a little bit going on down there. They're not just watching the Liberty Bowl from my hometown in Memphis, Tennessee. There's actually some trading going on the last day of the year.
Yeah, a little bit to sub going up today, which is surprising. I figured it'd be about 8 contracts and out, but they're pushing almost 100,000 as we start recording the show here, which is not bad for the final trading day actually of the year. We are also joined by somewhere in the great unknown, the great volatility ether, by the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. By way of Carmen Line, Mr. Greasy Meatball, welcome to the final volatility views of 2016, sir.
Great to be here. I'm coming to you live from the Sebastian home office in the greater Chicago area. Got all my family in town, so I'm at my parents' house, in other words. But yeah, weird day. A lot of weird stuff going on, and I'll have a couple of questions for Russell and a couple of thoughts for myself when we are get to the review.
All right, so let's table it then. Let's save it. Let's save all those juicy nuggets as we head on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to everything's the final of this episode, the final volatility review of 2016, and an interesting day, interesting week. It's been kind of a light volume week. We'll get to that. A little bit of stuff going up today, but certainly not a typical VIX week, all things considered. And as we round out the week here, kind of a bit of a shrug on most of the major indices. S&P off about 0.5% or so. The Dow threatening that 20,000 level, but right off about 36 handles right now as we're talking. So not looking like it's hitting it right now. And then, of course, the Q's off about a little over 1%. So the Q's taking the lion's share of the drubbing today. And with all that, the VIX Cash continuing to conspire to move north, which is kind of interesting. In fact, we asked right before the show launched, we went out and asked you guys a little pop quiz for the end of the year here. We said, hey, VIX Cash at the time we wrote it just shows you how much things are drifting up. It was at about 1370 or so. And we said, hey, where do you think VIX is going to close for 2016? And we gave you a bunch of different choices. We gave you kind of some ranges because, usually how much is it going to move by the end of the day. And so far, it's already surprised us with some movement. We gave you the choices of between 1375 and 14, over 14, between 13.5 and 1375, and below 13.5. And I'll give you a little bit of a spoiler. 1375 to 14 was winning. Of course, now that we're north of the 14 handle, we'll see. We'll see how that affects. This is only a quick pop quiz. It'll only be up for a couple hours. Listen, it's not one of our usual lengthy questions of the week. So if you want to play, get in there now. Make your voice heard before it expires. But it's been an interesting week out there, of course, and not just VIX Cash, but VVIX land. It's been hovering in that high 80s to low 90s, kind of in that similar range right now as well, right around 91 as we're recording the show and streaming live again. Noon Central here on Friday, the 30th of December, for all of you listening after the fact. And interesting stuff. Also interesting looking out there in all things VIX Futures. We've been talking a lot, on the program of late about how that, that gulf, that disparity between the cash and the Jan future was pretty sizable. It's about 2.5 handles, I think, when we last got together here on the program. Of course, something's got to give there. The cash has got to come up. The future's got to come down. Seems like the cash is narrowing that lead either way. It's about a 1.5, 1.4 handle premium right now as we're talking. So a lot of interesting stuff to parse, even though it wasn't the highest volume of weeks. Mark, you said you have a lot that's been catching your eye this week, so maybe we'll start there. What's catching your eye over there in the pit chat and over there at Carmen Line?
Well, I believe last Saturday, somebody on the CBOE blog posted something about the final week of trading, how the VIX tends to rally, and we're seeing that happen, which is kind of interesting. And I don't know who wrote it. Some hack over at the
CBOE. They have a lot of hacks over there. I'd be scared to quote them.
They do. And I was kind of interested in that, that turned out to be true. We haven't moved very much this week. I think on the week, we're going to be down about 1%, but the VIX has made a really nice move. And my thoughts are a couple of things. One, are we pre-pricing in any January effect into VIX? Two, are we pricing in some sort of risk from the long weekend? And then 3, is there a tweeting bird about the Fed? My guess is the third point is probably the least important. But I think we may be in a weird scenario where, whereas when we came in on Tuesday, VIX was up because of the long weekend. With the new year and the pre-January effect, we may be actually repricing in some, serious weekend risk into options, and that's part of the reason why we're seeing this outsized move given the movement in the S&P this week. Now, granted, VIX was coming from 11, but if you look at how much movement we've had this week, 14 and change might be a little bit stiff. So those were kind of my observations, is that we may be in an odd situation where we come in on Monday and VIX is flat or down, or Tuesday, excuse me, from a long weekend, and VIX is flat or down because nothing happened. And again, wondering whether we're pre-pricing in some January effect, which means maybe the January effect is a little weak this year.
It's funny you mentioned that, because that was my first thought when I started noticing this ever seemingly inexorable rise of the VIX Cash this week. It was a bit of a head scratcher because, this is the time of year where we're always saying, well, where is there any vol? There's no vol to be found. What could possibly cause vol? And we were saying a lot of the same stuff at this time last year. And then, of course, we all know what happened literally the first day out of the gate last year. And for the first couple of months, it was just like rock'em sock'em robots out there. So I did kind of wonder if in the back of some of the people's minds out there, you mentioned the January effect, maybe also a little bit of just January remembrance. Maybe their memory isn't as short as everyone always claims in the volatility space. When they have to have it, they don't have to have it. But it's kind of funny because everyone got sucker punched that first day out of the gate, and it proceeded for quite some time. Maybe saner heads are prevailing out there, and they're deciding, well, maybe we'll put a little bit in our back pocket in case this year, or next year, I should say, roars out of the gate as well. But you're right, it is a bit of a head scratcher. Mr. Rhodes, I think you might know the person who wrote that blog that Mark was referring to. Horribly, a lot of typos, horrible spelling and punctuation. Typical like what I expect from that stuff up there. But that said, what's your take on the week that was and indeed still is right now from a volatility perspective?
Well, it's more about the concepts than my punctuation. What do they call them? I don't want to use the term grammar Nazi, but are you being a grammar Nazi about the way I write?
And I found the vague, political dissertations in there, and some of the weird other racial undertones, all very off-putting, sir. No place in the volatility.
Yeah, it was. I don't know what was going on there.
What? I didn't say anything.
Not your best work, sir.
Oh my God.
Kidding.
I was on vacation. So
it was an excellent piece, actually.
Well, no, the outcome was. I love when I go to look at things and I get surprised at the outcome. And what I thought was really great about looking at those numbers was where I took a look at the January futures. And even though the index is up on average, and specifically what I looked at was the day before Christmas and then the first day of the next trading year. So we're still not through that whole situation yet, but on average, we'd actually seen VIX rise over that time period, which just kind of it was surprising to find that. But also, and it's because we get a couple of holidays out of the way. Those of us that pay attention to VIX, especially this time of year, are aware that the holiday effect is accentuated in December. I do wonder if, as Mark Sebastian said, I wonder if we're ahead of ourselves. And as long as we make it through New Year's weekend and nothing bad happens, if instead of maybe seeing a little boost, we actually see a bit of a drop relative to what would normally happen if we were talking about a non-holiday oriented weekend like coming up on. It's not unheard of for VIX to go up to go down after a holiday weekend. The volatility index that has never gone down after a 3-day weekend is VXST. It always, of course, we don't have trading activity on that one anymore, but it always adjusted to the upside. And the impact or the adjustment that you could see in the futures pricing before a weekend in that one was a lot more dramatic than what you see with VIX. But you do see the futures kind of shaking off the long weekend effect, or the multiple long weekend effect that we get this time of year with Christmas, New Year's, and the MLK holiday coming into play with respect to the VIX calculation.
Okay, you get bonus points, sir, for having the final reference to the much loved and much missed VXST. The mysterious. We had many great episodes delving into the mysteries of VXST and why it wasn't catching on. And I think we're probably the only outlet, only program, only content on the planet that did so. But it was still a great little mystery for quite some time. I'm glad to see that, even though you're right, it's not trading anymore. It still gets some love, still gets disseminated out there, and it still has a little bit of a place in the record books, even if no one wants to trade it anymore. But still, it's trading in spirit and all those VIX weekly options. Speaking of VIX weekly options, let's get right to it and dive right on into Russell's weekly rundown.
Now, Russell's weekly rundown.
All right, Mr. Rhodes, you know what to do. This is indeed the portion of the show where you hold court for about 32 minutes, I think, on all of the legion of VIX weekly options activity that was lighting up this tumultuous rocket ship of a VIX volume week. Have at it, sir.
There is a heck of a trade that came in using VIX weeklies this morning that I'm not supposed to say this, but hey, I'm on vacation. Somebody came in and bought 200 of the January 4th 13 calls, and they paid $1.53 for those. Those are weeklies that expire next week, and they sold 200 of the January 18th, the standard expiration 13 strike calls for $2.23, and they took in a credit of 70 cents. You typically don't see things in this order. Opposite of what we were just talking about, if we do get some sort of New Year's weekend volatility event, then this trade will work out extremely well because that would have the most impact on the January 4th futures contracts. I continue to remind people and keep an eye out, on this. But, the January 18th, the January standard VIX futures contracts expire before the inauguration. So I'm spending a lot of time looking at the January 25th and the February 1st. There's okay activity, nothing that really is totally standing out. It looks like somebody's got a nice long position in the January 25th 18 calls. There's the open interest is a little over 2,000. I believe when I dug into that, that was more buying than selling. There's open interest on the January 20th calls. I think some of that is matched up with those 18 strike calls. And then there seems to be a pretty big short position looking at the weekly expiration after inauguration, a pretty decent size short position in the January 25th 13 puts as well. But I think as we start to creep away from the Obama regime and into the Trump regime, you're going to see a lot more activity in those January 25th option contracts. So that's what I'm really keeping an eye on.
Yeah, interesting week. It wasn't the highest of volume weeks like you mentioned. Today doing not bad, about 100,000 contracts. We had had a bit of a nadir earlier in the week. I believe it was it was Monday actually with what was it, 70 actually not Monday, Tuesday, with about 79,000 contracts. I have to go back and look, but that's probably close to the low for the year, if not the low for the year, I'd have to imagine, Mr. Rhodes. And I'm sure you don't have that data off the top of your head, so I won't expect you to pontificate on it at length. But yeah, that's a definite outlier for a product that can easily light up over 1 million contracts on any given day. 79,000, pretty quiet. Doing even more than that already 100,000 contracts, including all that weekly option slinging, that time spread that Russell was alluding to earlier today. Otherwise, a shortened holiday week, the highlight of the week probably volume-wise, about Wednesday, about nearly 400,000 contracts. Still all of it well under the ADV, as to be expected. That ADV continuing to It was around 600,000 contracts for the lion's share of the year. Towards the end of Q4 here, it has slowly moved down to about 550, now down to about 540,000 contracts this week. Not really probably going to help with that. But again, it's a holiday week and not exactly expected to be lighting it up. One thing was lighting it up, and Mark, you probably have some thoughts on this as well, I'd imagine. I know your cohort, Andrew, certainly did on the option block yesterday, which is, there was, even though it was light paper this week, there was some interesting stuff lighting it up this week, I know, including some interesting risk reversals that were kind of catching your guys' eye out there this week. So if you have any thoughts on those, Mr. Greasy Meatball, did you like them? Did you not like them? Where were they going up? Outline them, illuminate our listeners.
In VIX itself, or there were a lot of different types. They were trading a lot of different stocks, but we did see, generally around this time, you do see a lot of guys come in and sell puts and buy upside. I'll tell you, Tuesday, you could have put on a 1x2 back spread for next to nothing coming in, because VVIX was in the floor. VIX itself hadn't taken off. There was a real opportunity to get some cheap stuff. So and actually VIX Futures had bottomed out. The Jan future was at 14. There was all sorts of opportunities to sell puts and buy calls and set something up, and that trade's been pretty profitable. We're starting to see the hedging activity move from January into February. We did see the biggest trade I've seen on the day was a Jan 1520 1 by 1.5 call spread tied to 1510. Paper sold it at 57 cents 15,000 times. So they sold the 15s, bought the 20s, and bought the 20s on a ratio and bought future. Really interesting little play. The guy clearly is looking to collect a little premium, looking to be long up to about 15. And then if he's really right, then he starts to do pretty well above 20. So a little play on either nothing happening or on, VIX maybe hanging around 14 for at least the next couple of weeks. This guy's in good shape till about 14 on the future.
Well, not exactly 1x2, but on a decent ratio. Those ratios, they never tire of those out here. I think we have a listener question.
They don't. They love them.
I think we have a listener question to that effect in a little bit. Speaking of what else was lighting it up, again, not the hottest of overall VIX weeks, but there still were some hot strikes. We were able to compile a top 10 list for you, our final top 10 hot strike list out there in VIX land for the year, listeners. And number one, not the aforementioned 20s, but the aforementioned earlier 23s to the tune of about 206,000 contracts, taking our final number one spot for the year. Again, a lighter portion of the year, open interest kind of light, volume kind of light. Usually number one with a bullet slot, we'll see 350, 400,000 contracts easy in that. Instead, this year we end out with a bit of a quiet note, 206,000 contracts. In the number one spot, it's a bit of a Jan call strip here, followed by number two, the Jan 21s, 170,000. Number three, the Jan 20s, 168,000. And Jan 22s, 161. Number five, the Jan 25s, 158,000. Then we go down to number six, where we get our first and only Feb of the list. Also no puts this week, which is interesting. The Feb 30s, 157,000 contracts. Number seven, the Jan 30s. Again, that 30 strike. We were talking about that last week. Maybe Russell has concluded his research into that topic of why the 30 strike remains just so captivating to so many people, regardless of where the futures are, regardless of where the cash is, regardless of where the broad market is. The 30 strikes just have this allure that is somewhat mystifying. Number seven, the Jan 30s, 148,000 contracts. Number eight, the Jan 18s, getting a little bit deeper, a little bit meatier here, 146,000, and pretty much tied almost exactly with the Jan 17s. So a bit of some maybe vertical paper going up there, 146,000 open there as well. And number 10 falling off a bit to Jan 29s with 119,000 contracts. Total about 5.25 million contracts open, all told about 3.95 or so on the calls, about 1.3 million on the puts. Really quickly before we roll out of all the major review here, let's just touch on quickly, because it has been such a story of the year. all things crude, and they just continued, I don't know, call it what you will, slaughter, implosion, whatever, of crude vol. We've talked many times on the show how it seemed to have set at least a 52-week or so floor somewhere in that mid to high 30 range, maybe 35 to 37. Blew through it last week, continues to remain well south of it as we speak. It's flirting with the 30 handle again. It was OIV and OVX were both in that high 20s for the better part of the week here. We saw a little bit of a sell-off finally in WTI earlier this week, and that maybe helped juice a little bit of that vol back in. But other than that, short of any sort of pronounced sell-off out there in big crude, which is still where a lot of the volatility premium is in those puts, you're not going to see a huge resurgence of volatility. So we end the year on a markedly quiet note from a volatility perspective out here in crude oil as well. Before we keep on rolling to your questions here to round out the year, anything, Russell or Mr. Greasy Meatball, on all things crude vol? Could be USO, could be XLE, could be WTI, whatever floats your boat.
Yeah, what was interesting was that, we've really seen crude vol just tank. It's now down to basically what amounts to normalized levels. After having spent near 2 years, pretty elevated. So, one of the mistakes a lot of people make is they think that the recent past is what's normal. It's called recency bias. And one of the things that I think a lot of option traders looking at crude are thinking is, oh, well, this vol's cheap. Well, no, this vol's not cheap. This vol's about normal, maybe even a little expensive, given the situation. And I think that that volatility is what it is.
It's funny. I think that recency bias may be even more pronounced in this product right now, because I know just anecdotally listening to our audience and seeing the feedback they send us and the type of input we get on this stuff, that a huge number of people over the past year and a half or so have really just been drawn into the crude complex that have just never played out there before. A lot of them on the broad retail, they were looking for a little bit of volatility. Crude had that. They were looking for a little bit of action, directional bias. The crude had that. Crude was on top of the headlines. Crude attracted a lot of your old school Apple and Facebook and Google players, who only play on that side of the fence. So for a lot of people, this past year is kind of really their only frame of reference for crude volatility. So I could certainly see how maybe why a lot of people out there, a large chunk of the audience, particularly on the retail side, kind of had that very much that recency bias to them, where they were thinking that recent floor. That's why I said it's a 52-week floor. It's not a 10-year, 20-week floor, or 10 to 20-year floor, because if you go beyond, obviously, a crude vol can get a lot lower. But yeah, people have it in that frame of reference, and it's kind of hard for them to break that mentality. Mr. Rhodes, while you're so busy rounding out the year there, doing all your end-of-year analysis, anything catching your eye out there in the realm of crude volatility?
I'm going to correct you. It's time for a correction. I'm like the guy on that sports show that basically keeps up with all the guys spouting stuff off and comes on at the end and says that something might have been slightly wrong.
Are you still mad about my slamming of your blog?
I'm not mad about anything. Stop it. I am winning the freaking VIX. I've noticed you haven't even talked about the crystal ball, and I'm knocking the cover off.
Oh, yeah,
the
you're
ball
right.
today.
You're actually close this time.
Jumping at. That's why you're being bitter toward me.
You're in the realm of probability this time, which is impressive.
Well, you threw out there that put implied volatility might be working, keeping a floor on oil option volatility. Actually, I pulled up my skew chart using my handy dandy Live Vol Pro platform, and looking at the standard January option contracts, the skew is actually leaning. It's leaning toward the upside. For the last options in January, the January 27th, the volatility for the out-of-the-money USO options is at a very high level.
Oh, no, yeah, you're right with the near-term stuff. The calls have been rich in WTI and other things across the board for a while. So if you look front month or in the weeklies, the calls have been leading the charge. If you look longer term, the bias has been for the better part of the last year or so on the put side. But you're right. If you look at just in the front crazy, portion of the curve, the calls have gotten pretty rich as well. So yeah, in the near portion, you're right. I think, longer term, if you want to get any sort of this vol juicing back in, you're going to need something pretty extreme to the downside. But you're right. In the near term, the calls have more juice than they have, let's say, 2-3 months ago.
Where I wanted to go with that is, when we're talking about earnings, and we'll take a look at the money volatility for stocks that have weeklies, and notice a big jump when when a company's getting ready to report earnings on a week over week basis. I'm just wondering if there is some sort of catalyst toward the end of January that has people worried about a potentially higher oil price. And I don't necessarily mean, all we've done is talk about Trump and the inauguration. Is there some sort of meeting? Is there something else that is toward the end of January that I, if I had more time,
when's the Federal Reserve? When's the
Uh,
Federal Reserve meeting in January?
the next Fed meeting, there's nothing really, when you look at the CME's Fed tool, there's really nothing until maybe the March, most likely the June meeting. So I don't know if it's that. I just wonder if there's another OPEC-ish type thing that's scheduled between the 20th and the 27th.
We do.
You know what?
Earnings.
That's all. I don't know. That's why I'm asking.
Russell, we have earnings. Earnings begins that week as well.
Yeah. Yeah.
So you've got a lot of stuff, and really, if you look at crude has been interesting. I don't quite understand where all the bullishness is coming from. I think they've gotten a little ahead of themselves. One reason for a call skew is that it could be hedging some short futures positions. It could be just somebody wants to set up a position for all of January. There's a lot of reasons, but yeah, I mean that smile is pretty aggressive in USO and WTI. The other one that continues, the other vol, Russell, that I think continues to be, given the interest rate risk out there, I'm surprised. TY VIX and VX TLT continue to be as inexpensive as they seem.
I'm just liking that Russell created a new word, OPEC-ish. I like that. I might have to borrow that for future crude-related developments. If you like this conversation of what's going on with Crude Skew, I encourage you to check out our TWIFO This Week in Futures Options program on hiatus this week, but we'll be coming back to you live next week with some interesting shakeups, I think. Some interesting changes. So check out that. We spent a lot of time getting into all this kind of stuff, mostly on the WTI, as you might imagine, and the big futures option stuff. Don't touch as much on USO, but it's very similar, very related, so you can kind of draw various conclusions from that. But now it's time for us to keep on rolling into your portion of the show. It's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Like the man said, this is the portion of the show where you guys get to dictate what the heck we talk about. Really quickly here, we did give you guys some questions. Our pop quiz is starting to draw some ire as VIX Cash vacillates around here, heading into this latter half of the trading session. Again, we gave you those choices. We said, where will VIX close here for the year 2016? We meant end of the day here, market close here, and we gave you choices between 13.75 and 14, over 14, between 13.5 and 13.75, or below 13.5. We can even play this ourselves. Why not? I'll give you guys what's winning right now. It's between 13.75 and 14. Actually, it's a tie. Just became a tie. 38% each between 13.75 and 14, and those savvy over 14 people who are listening to the show right now also piling in. So equals for 38%, 10% so said between 13.5 and 13.75, and 14% saying below 13.5. You got about a couple hours left, obviously, till the end of the day, and then it closes. So if you haven't voted yet, make your voices heard. What are you guys feeling on this? Where do you think we'll close? Think we'll close right around here, over 14, maybe back in the 13.5 range? What are you guys feeling for the end of the day?
I think that we'll end up around, somewhere between 1380 and 1390. I don't think they're going to be able to hold it above 14 unless we get another push lower. Now, we get a push lower, who knows, but that's where I am.
Does seem like these are pretty lofty levels to maintain.
And by the way, the next Fed meeting is January 26th and 27th. So that could be something involved. With our previous discussion, just an FYI. Yeah, I mean, I think if we get a market sell-off, like, where the S&P ends up down 10, you could hang about 14. I think while we're talking, we'll end up back with a 13 handle.
Mr. Rhodes, agree, disagree? Still angry over your OPEC-ish?
No, I've got it. Sorry, I have to correct Mark. I was checking something real quick. Good Lord, people. Mark Sebastian, January 25th, 26th, the dates you just gave were the 26th meeting. 27th was the 2016 meeting. The next Fed meeting is January 31st, February 1st.
Oh, all right. Well, there you go.
I knew that February 1st was the announcement date. So
okay, so there you have
sorry.
Welcome back to our volatility ombudsman.
Everybody's correcting everybody.
Yeah.
I love it.
Right.
You got the ombudsman here on the show.
We'll hold each other accountable.
All right, let's move on to a question here from Tadoom. I like that handle. He wants to know what our biggest volatility surprise of 2016 was. He says his was Brexit. Brexit's certainly up there. I think for me that would probably be a nice number 2, just because I can't, for my money, I can't think of anything this year that happened that was more tumultuous, more crazy, had more conflicting narratives going on than all of the election debacle, particularly that election night debacle. That's the only thing we did this year where we did 3 live broadcasts on. So just from a content quantity perspective, that wins. But yeah, just the craziness in the overnight, everything selling off like mad. VIX Futures spiking into the 20s, and then once cooler, saner heads prevailed, once that conciliatory concession speech came around, we saw that almost immediate reversal, and then now we've been on this kind of Trump-induced rally ever since, and this VIX crushing until, of course, this week. So it's that to me has been that was my biggest volatility. If you want to say biggest surprise, you probably could say his victory, but volatility surprise is a corollary thereof. What do you guys think? You guys agree, disagree? You with Tadoom here? You think Brexit was bigger, or maybe something out of left field that caught you by surprise? Mr. Rhodes, we'll start with you.
How low VIX has been throughout December. That's the one that's really kind of gotten to me. Now, I know that the market's been up 12 of 20 trading days, but the way the market reacted to the Trump presidency, that overnight action where we basically digested 6 months of fear, greed, and then recovery in an overnight session is probably one of the most remarkable market things we'll ever experience. And I think part of the surprise is how quickly the equity market rebounded.
That was nuts.
Yeah, I mean, I've been trained from one of the best mentors I had to always fade any kind of market activity that is based on non-market fundamentals, such as a government, change in regulation or an election or something like that. And I guess everybody's been trained to do that now because the recovery only took, about 97 minutes, and I'm making up that figure. But the whole market activity since November 8th, I think, it would probably be everybody's big surprise. We weren't surprised about Brexit here. We were doing some
we were
money, and we kind of that one wasn't as big of a surprise.
No, if anything, we were surprised that people were
50-50.
crushing vol.
I remember we had a big discussion. Why is vol so cheap ahead of this?
Yeah,
because it's not. I mean, it's 50-50, and the shocking thing was that, we remember this. We were shocked that the recovery took, how quickly we recovered 3 days later. That market, we literally went limit down and then to an all-time high in about a week. That was incredible. Now, one thing that is interesting is, Russell, as low as vol was in December, really, if you count today, the market's up like, 1%, 1.5% on the month. So we had that massive November, really that entire rally, that entire new all-time high, run, took about 15, maybe 10 trading sessions. I've never seen the market go limit down, nasty all-time high, and then nastily reverse to an all-time high. It's one thing for it to have a nasty reversal after a couple of really ugly sell-offs, but to go that ugly and then that high that quickly, that has to be the surprise of the year.
Yeah, it was pretty crazy, and you're right. The nature of it, how it all unfolded, and you're right. Brexit for us, we were slamming the people who were slamming vol going into that week. It didn't really make a heck of a lot of sense. As you recall how that played out, there was one poll somewhere that came out and looked like it wasn't going to happen, and all of a sudden everyone just took it as a done deal that it wasn't going to happen, and we all just really just couldn't understand it. Here we got a live chat question here from RealRX. Hey fellas, when vol is this low and heavy volume in January SPY puts of late, in parentheses, and hedge fund redemption rumors, what long vol delta range do you prefer to use in these super cheap premium times? I'm just reading this live. 30 to 40 5 days out. That's his question range. Interesting range. Why you'd be that near if you are going to be in that long vol delta range. You're talking. I'm assuming he's saying SPY puts. I guess it depends what you're looking for. I mean, if you're looking for very, very near-term kind of bang for your buck, but 30, 45 days is, I don't really think of it as long vol. I think of that more as that's a gamma play. You're looking for a lot of bang in the index in a very short term. Maybe it's just my bias. When I think someone tells me they're looking at long vol plays, I'm thinking a little bit farther out. I would think farther out in that term. I don't know, Mark. When you're looking at your long vol delta range, as he puts it. Interesting term. What do you? I'll paste this question in so you guys can see it yourselves as well and follow along. But there you go. But see, I don't think of that. If you're going to load up on vol, you're going to do probably longer than 30 days, I would think.
No. I mean, it kind of depends. Of
course, you like your weekly put spreads out there. Your 1x2 put spreads too.
Yeah, weeklies are obviously pure gamma. 45 days out is a nice mix of Vega and Gamma because you do well on the move, but there's enough Vega in there that you can do pretty well. Now, the one thing I would tell him that I would have agreed with his statement, Tuesday, but now that VIX is back above 14, we're going to a long weekend. If you look at where realized vol has been, VIX ain't that cheap, and vol ain't that cheap anymore. VIX ain't that cheap. But hedge fund redemptions, maybe that's another reason that we're seeing some action here. That could be part of it this week. But that movement, all that hedge fund redemption stuff, that happens this week and last week, not the other way around. And we're now seeing for the first time in a long time positive cash flows into mutual funds and index ETFs. So, that should be more than covered by anything in hedge funds. So, when I'm looking to go long vol, I go, about 45 to 60 days out, And, that's usually where I'm going to be trading around this stuff. Just because I like that mix of Gamma and Vega.
Yeah, I think 60 is healthy. I think 30 is it might be painful.
30 you're getting there.
Mr. Rhodes, anything? Or actually, I got another one for you here, Mr. Rhodes. If you like your historical volatility questions, I got one for you. If you're ready,
well,
if you're up in arms.
No, I was just.
Go ahead.
I'm looking at. I was just looking at. I was just going out 60 days and looking at the skew on the February SPX options and I was trying to find where we could find cheap volatility. Skew's kind of flat for the February option, so you could make an argument that vol's kind of cheap, going down to around the 2100s on the puts, just to shed a different light on that question. So 60-day options, the skew's flatter than the 30 for sure, and the 30 expire before the inauguration.
Right.
So.
Yeah, you're not getting the bang for the buck I think you want with those 30s.
Right.
It is, I think, surprising in general still. He mentions heavy SPY put volume, but it is kind of surprising. We had been in this protracted run-up, and still, the skew isn't perhaps not as steep as you might expect, given all the other ancillary things that could be pointing in the other direction. All right, let's go from looking 30 to 45 days out. Let's look back. We got a question here from Andrew P. He wants to know, this is right up your alley, Mr. Rhodes, keeper of all things historical VIX data. He wants to know which president oversaw the period of greatest volatility. Now, the greatest volatility, that's a subjective term, I suppose. We can look at that a couple of different ways. We can say like the biggest maybe delta between when he came, somehow what was the gulf of VIX, some in that range, could be the most 1% move day. That would be a hard data point to calculate. But that would be a challenge, I think, in general. But that said, it's kind of hard to. Obama came in when things were rocking and rolling. He came in beginning of 2009. That was certainly a tumultuous period. He missed the late 08 market meltdown. That was on Bush's watch. So you got to kind of attribute that to him. But Obama certainly oversaw a very tumultuous range in VIX. So I don't know. These 8 years, there's been a pretty broad swing in VIX. I don't know, off the top of my head, I might have to say him, because we don't have data going back to FDR days. That might be kind of fun to have that, though. But yeah, that'd be challenging. I don't know. What are your thoughts, keeper of all things VIX historical, sir?
Well, Clinton presided over the. He basically didn't he preside over the end of the internet boom, or did Bush get that? Did W inherit that?
That was Bush.
That was Bush.
Oh, then if he got part of that and got part of the 2008, then it's all about.
Yeah, that's
W.
true. I forgot about that. That was March.
I was trying to,
That was March 2000 or so when that meltdown started.
Yeah.
And that's right on Bush's watch. So yeah.
He got both of them then.
Yeah,
So.
Bush. Bill Luby put something out. Bush had the highest average volatility over any president, any of the last 14 presidents at like 20%. The lowest was LBJ. But there's been a pattern of volatility being a little bit higher over the last couple, call it since kind of Reagan came in. So, there's that.
Yeah, Bush also had 2001. So
I mean, he had everything. Yeah, Bush got
he got
a lot of bad stuff.
He got a raw deal. Yeah, I recall in the
Yeah.
early days of his administration really saying, "Oh yeah," especially when that meltdown started. Obviously trying to pin in on the previous administration because he kind of inherited it. And yeah, there was a lot of fun stuff under his reign. And you're right. So maybe I think Bush might have to take the cake. There you go. I'll look at Bill's analysis and see what he thought of it. It might be kind of interesting. Great question. We got time for. Let's see one. This one's been sitting around for a while, Mark. So I think we'll give you a chance to answer it. This comes from William. He says, Mark S. said he was a fan of long ratio put spreads on last week's show. I think this is about a month ago, so that's how long this question's been sitting in there. He says, can he explain a little more about why he favors this strategy and what setups are favorable for it? Just to refresh your memory, Mark, we were talking, I believe, at that time, there was a preponderance. We always talk, obviously, ratio upside, sell one, buy two, but there's been a lot of reverse over, especially about a month ago, of the 1x2s on the downside from a put spread perspective. So Mr. William wants to know why you like it and what is favorable about it. When do you like to use it?
The bull ratio VIX spread. Well, what's nice about that spread is that it does what really if I'm a fund managing a big long book, all right, that spread does a great job of hedging what I really hedge. I'm not worried about little market pump fakes. I'm not worried about the market making, the VIX going from 13 to 17. I'm worried about the VIX going to 50. I'm worried about an 08 type event, a 2011 type event, where volatility really does explode. And using those spreads, there's very little cost to them. And they have the real power of the VIX, and Russell has done entire presentations on this, is that it's a sticky strike. So you look at the S&P, and this is I'm going to make this a long story short. You look at the S&P. Here we are. The S&P is 2250, and the VIX is 14. Well, guess what? The VIX was 14 at some point when the S&P was 1200. 1,400, 1,500, 1,800, 2,000. So the VIX will always maintain that ability to hedge almost to the last week. And using these back spreads, you give up you give yourself a little bit of risk to getting beat on a little market pump fake. But in the event of a true systemic issue, you are going to be hedged, and you're going to be hedged well. And that's why these are such a powerful tool. Now, I like doing them as a part of involving a put sale or a put ratio sale as well, because of the fact that VIX has a limited downside. So it's really, I think it's a well-constructed trade. You obviously have to pay attention to volatility. I don't like these spreads when VVIX is above 90. I really like putting them on when VVIX gets, which is the VIX index for VIX options, when that gets to the low 80s and futures contango isn't overly steep, there can be that trade can be highly effective.
All right, and we got a couple people chiming in the chat room really quick. RealRX trying to clarify himself, says apologies for the phrasing confusion. Just started reading options as a strategic investment. Well, congratulations. I meant the redemptions possibly causing a sell-off of the Facebooks and other favorites. So yeah, there are redemptions, which we talked about earlier. They could indeed apply to all of that, but we were saying that that happened perhaps a little bit earlier. Let's see, we kind of run up against it. We don't have time for the rest of these. We'll save more of these for 2017 as we roll on into our final segment, the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the Crystal Ball.
All right, everybody, welcome to the Crystal Ball, the most tumultuous, topsy-turvy part of the show. As Mr. Rhodes pointed out oh so clearly at the top of the show, he is indeed in the winning seat this week. It's a dubious victory because he's still two handles off. I tend not to count those too much, but in the order of magnitude movement realm, he is the victor. With last week, I was feeling a little bit more vol. I think like a lot of people were. I was feeling a little bit more vol coming back to the dark side. I thought it would hang out where it was and come off a little bit. I think we closed the last week right around 11.5, 11.75. I thought we'd come off a little bit to the downside, right about 11.25, and that's what I was predicting. Mr. Rhodes, predictably, after trying to cart me at 11.26, it went up to 12, which is indeed the closest without going over. And the ghost of Mark S. was just not feeling the love at all. He thought VIX was going to drop to an apocalyptic 5.2. That did not come to pass, unfortunately. So, yeah, Mr. Rhodes, winner by default. Second, I think, it's your second victory of the year, or maybe third. I lose track. Either way, congratulations, sir. You round out the year with a victory. So congrats to you.
I'm finishing strong.
You're finishing something. You're finishing something.
Yeah.
You're finishing with a win.
So,
I don't know. You're supposed to keep track of these. You're supposed to see who has the most victories.
I'm keeping score.
I thought that was your job.
I win.
There we go.
I love it.
There we go.
So,
Mr. Rhodes wins.
I think I won 3 times last year.
I think you did. Not your best year.
Brexit. Trump election and this.
I think it's the tie between me and then maybe the guests came in pretty well as well. I don't know about the
Hey, I think I did pretty well.
Your ghost did all right. Your ghost did all right when you were gone. Your ghost did pretty good. Not this week, but your ghost did all right. But that was Russell's job to keep track of this stuff. So Mr. Rhodes, I have a question for you guys. We're going to do our regular predictions. I have a question. Are you guys feeling your oats? Because we added this at the last minute. We can go forget predicting a week. We can go all the way to the end this time next year. And what do you think VIX Cash will be? That'll be a little bit more tumultuous analysis. Do it on the fly, seat of our pants, 30 seconds. What do you got?
No. We do the average VIX for 2017.
Oh, I like that.
Average VIX for 2017?
Yeah.
Okay. Yeah. Not quite as sexy, but I see where you're going there.
No, because we can actually check in.
Let's throw it, and we'll throw in a high. Let's throw in a high and a low as well.
Oh, I like it.
All right.
I like
so,
it.
I do too.
I was going to give us like a VIX range. I was
All
going
right.
to give like a 1 point range for next year, but we can do an average.
No.
Like.
I like average VIX, high and low.
I like it because I do like it.
Average.
I'll even go first.
All right.
All right, because I won.
You did win the final week, so you get to go.
So I like this. Low of 1250. High of 37, spot 37. And an average VIX of 17, spot 50.
Wow.
We are overdue,
17.
gentlemen.
Low of 12
17.
half. Wow, you're
Yeah.
feeling your oats.
17 and a half, huh?
Dude, holidays.
Mm-hmm. All right.
And you said average
I'm
of
gonna-
what? 16.5?
17 and a half,
Oh, 17 and a
which
half.
is aggressive. All right.
Yeah.
I'm going to go. Mark, you want me to go next or you can go?
You can go.
It's up to you.
I have to type all this stuff
All right.
up, so you go next.
All right. I'm going to go with an average of 15. So down a point from this year, I believe. I'm going to go with the average has been about 16 this year, right, Russell?
It's 1586. I was just calculating these numbers before the show.
So I'm going to go down a little bit. I'm going to say the average is 15. I'm going to go a low of 1050, and I'm going to go a high of 24.
Interesting. You're not feeling the love. I feel you on the downside. You're feeling a pretty tight cap on the upside there next year. Who knows?
Yeah,
we could kick off the year again with Putin going crazy, and who knows?
Yeah, I mean, I'm looking around for any major type of. I'm thinking about any major elections or things like that, and I don't see a lot on the. I don't see a lot on in the cards in front of us. Maybe something in Italy, but Renzi guy got ousted and nothing. I mean, short of a bank failure, markets seem pretty resilient right here. So I'm gonna go, yeah.
All right, this gives me not a lot of room to play here because I was thinking around that 15 level as well. So let's think. So I'll be the I don't know. I don't want to go that much south of 15. That's a pretty low average for that. Would be a pretty quiet year. You got to factor in a couple of Brexit-esque events somewhere along the way. So let's go. I'm gonna give Mark a little bit of wiggle room though. How about this? Let's go. I'll say my average will be. Let's say 15.75 is right about where we were this year. So let's go 15.5. And then a low, Russell's low is impressively high. I think we'll definitely break through 12.5. 10.5 is interesting. I'm going to say our low will be, what the heck, we'll go crazy. Let's say, I'm going to say we'll have a very quiet period at one point. I'm going to say, I don't know, not that far below 10 though. So let's say, this is our 30-second analysis on the fly, listeners. So I'm going to say a low of, I'll just make it 10 because I don't think we're going to break that solid below it. That gives Mark a little bit of wiggle room around his 10.5, so he doesn't get anything. Upside, though, I think you're going to have a little bit more upside to go. So I'm going to say, not 37 is pretty nice too. Let's go 34.5. All right. There we go. And with that, I think that's about does it for our crystal ball. It also does it for this year of volatility. What a crazy year it has been. What a crazy journey it has been on this program. We, of course, had Brexit. We had all things Trump. We had a bunch of other things. We had the beginning of the year, which was China and the Fed and everything all combined into one. It was just, the technical term, I believe, is crazy cakes. And we'll see if we kick off the year in that type of mode again. It could throw all this carefully planned analysis we just did into the toilet. But that's what makes it fun. All right, and before we go, let me check back one last time with my cohorts, my partners in crime. Let's go first with you, Mr. Rhodes, to celebrate one of your few victories of the year in the crystal ball. What's coming up in the land of SIBO Live Ball, as well as all things Options Institute?
Well, the Live Ball's it's got all kinds of cool add-ins. I'm still working my way through all of those. It's got much easier ways to sort previous time and sales. Got a lot more history as far as time and sales goes. So that's what's cool about Live Vol. I think I'm going to go out to San Francisco and see them in a few weeks. As far as the Options Institute goes, we're going to be doing, we're going to spend more time doing what we're referring to as focus classes. The first one is January 27th, and it is focusing on generating trading ideas.
Oh,
So
interesting.
that's our first focus class.
There you go. Check them out over there at Options Institute. And of course, you want to check out the Live Vol. But much places you can do it. Search for the Data Shop, Live Vol Data Shop, if you want a custom, bespoke data set, or indeed just search for Live Vol or CBOE Live Vol. Go to livevol.com. You can click on that green button. You get the 15-day free trial. So you're talking about all the stuff that Russell's talking about. I haven't even discovered all the new bells and whistles. Maybe we need to get a Live Vol guy on in the new year to walk us through all the cool new additions to the platform. Maybe we will do that. But check it out, livevol.com. You too can try it for free. And Mr. Greasy Meatball, what's cooking here in the new year in Option Pit and Carbon Line?
Well, Option Pit, we are going to be doing a vol intensive course starting end of January, and I've got some things in the work with the Live Vol people as well. I think we may produce some really cool stuff this year. Be on the lookout.
All right, check it out over there, optionpit.com. You got RealRX saying he just entered the industry. He passed his 766. Well, congratulations to you, sir. Maybe we'll have a chat about some of our further knowledge things on the next show, because we got to wrap it up now. On behalf of the Greasy Meatball and hopefully someday down the road, Dr. Bix, congratulations on your first or second victory of the year. You needed one, and indeed myself. I want to thank all of you in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great and many and varied questions. Keep them coming in the new year, and we'll see you in the new year with more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.